Alright, welcome everybody. My name is David Petrinick and I'm going to be showing you how to identify support and resistance. So I think a lot of you probably feel as if you know support and resistance, and I'm sure you do, but I'm going to show you a different perspective that's really helped me out in my trading. So here we go. There's something called a fractal pattern. You might have heard of it, you might not have, but it's really what defines a support and resistance level. So what we do is we go to the candle. We'll look at the candle, and that'll help us define the support and resistance level. You can see I've drawn these lines here, which represent the levels. And I'm just going to zoom in just a wee bit here, and on the candles themselves. And you might want to write this down. The definition of a high, based on this technique I'm showing you, is you have your center high right here, and this is your highest high, and as prices were going up, they were going up nice and steady, and all of a sudden they hit a point like, they pulled back a little bit. You can see the wick there. This is the body of the candle. The prices opened up down here, ran as high as here, pulled back, and closed right there. And then then the next bar opened up here, went as low as that wick, but closed at that body. And then the next bar opened there, and onward. So once we had two candles closed to the right of this high candle, our high was in. Our resistance level was in. Okay? Now in this market here, in this snapshot that we can see here, prices are quite a bit choppy. Kind of chop up, chop down. Prices are in consolidation. And when you get a lot of resistance points on a downtrend, really kind of close to each other, like you see here, you should watch these closely, because I'm going to show you a different market as well, but when they're spaced out, well, first of all, you have to understand this. Above every one of these highs, people that went short up here put their stop order up here. They might even went short down here, and they still put their stop order up there, because this is the safest spot. If it goes too much higher than this, you don't want to be in it. It's probably going to keep going. So this would be like the safest spot. And then when people that got short here, a lot of them put their stop orders here. They didn't want to risk themselves all the way up to there. They figured if it could break these highs, it's probably going for these highs and onward. There's actually a defined high here. Here's our center high. We have 1, 2 to the left, 1, 2 to the right. Okay? Now lows are the same thing, it's just upside down. Here is a center low here, and we have 1, 2 to the right. And you can see prices came down, bounced off of it, and took off, went back up. And prices came down again, near it, bounced it, above it, near it, bounced it, and then this time tested it right there, and then bounced up again, got back above it, and bounced higher. And what most likely was happening here is prices, they took out these lows here, and they were really close to, prices took out these lows with this little move, and then they went up and then ran out of gas, and then came back down and tested these lows and bounced again, and then ran out of gas, and then came down and took out these lows. So what was happening, prices didn't really have any direction. They didn't really know where they should be going, but they knew that they had to move, and prices will find liquidity by taking out stops. If your stop is too tight, it's just the way it is. And so this also helps with knowing where to place your stops and where not to. Like if I was short this market at this point in time, I'd probably want my stop above here, because I figure if it took out this high, it's going to take out this one, this one, this one. It's going to keep running. And in fact, I might even want to go long. In the same case, I've got these lows down here, which are pretty close to each other. So if it takes out this low, I might want to go short, because it's probably going to take out this low. It doesn't always work out that way. If the market gets some sort of directional information, or directional volume, then it can reverse. But these are like landmines, and it's like a domino effect. If the landmines are really close to each other, one might set off another one. And that's what happens when stop orders get really close to each other. So there we go. So you just keep watching it, and these are our untested levels right here. Actually, this is one right here I didn't even identify. this one, this is a tested resistance level, and you want to you don't need to even, I didn't post it, but if we were in a live market right now, which I'm not, I'm showing you the past for illustrational purposes, and then we can analyze it. Well, there's no reason to analyze the live because this is going to be a recording anyway. But you can tune in for our live radio shows here at JDfn.com. You can contact one of our reps and get a copy of the software if you'd like to tune into our radio shows where we actually do this live analysis every single day. I'll call a lot of trades. And if you just want the alerts, we also offer alerts as well. So here we are. This one was tested with this move here. Bam, bam. So you no longer need it. So you can just delete it. Once one's tested, you don't really need it so much. So there we go. This one held. If this one breaks, then you're probably going to want to go short because it's probably going to come down to this one. Keeps building. I went ahead and drew these because it takes a little bit of time to do. But these little guys held. But if these little guys break, then they're okay. Yeah, we're probably going to see a little bit of a move down here. Yeah, there we go. And you can go ahead and get rid of these because they pose as future resistance, like you see right there. But the thing with charts is you don't really want to, as soon as things get cluttery, you kind of want to get rid of some of your lines. So as you can see here, prices took out these lows, managed to test this low here, and then bounced. Notice the buildup of candles here. Notice how many lows were formed. We had a low here formed, 1, 2, 3 to the left, or to the left, and then to the right. And it came down again and made a double one, which was like basically securing the area, showing the strength of it, and then made the run. So then it took out these highs. Then it was very easy for it to take out these, and then these, and then these. This is a very helpful tip, folks, if you can identify these types of setups. And so as you can see, once they got the momentum from these, it ran on these, and these. It ran all the way up. Going to zoom in on it a little bit. Move forward at the same time. So as you can see, things kept moving. They kept moving, and then once they ran up on all these stops here, they ran out of gas. Actually, they created their own stops along the way. I can see these big wicks right here where they're on a smaller time frame. They were creating highs. They created a high right here on a lower time frame, one here, one here, one here. So there was people calling the tops along the way, and they finally, when they quit, they gave up around right about there, and then the market pulled back. So yeah, that's how you do it. Hope you enjoyed the tip today, folks, and tune in for more. We'll be going over plenty more tips. This is just the foundation. Have a great day.